Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to take a look at Visa stock as we head into 2021. Visa is my largest position in my stock portfolio, so I'm very passionate about it. But some of the momentum has come out of the sales for Visa over the past year or so, mostly influenced by the pandemic, but there's some other driving forces as well. So we'll dig into those in this video and try to figure out where is Visa heading over the next 12 to 24 months. Is it still a good investment? And am I holding strong? Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before taking on any investment. And of course, if you like stock market analysis and personal finance videos, then please be sure to subscribe to the channel, give this video a like. It helps ensure that you see all the great content I have planned for 2021. All right, so from the top with Visa, as I mentioned, it is the largest position in my portfolio. It's just a notch above PayPal, who has sort of grown into the number 2 position. And the way PayPal stock's going right now compared to Visa, it might actually turn out to be the most valuable position and overtake Visa. But I'm still a huge fan of Visa. Nothing has really changed there. But as I mentioned, there's been a lack of momentum out of the stock, and some of the not necessarily negative headlines, but I guess you would say disappointments have kept the ceiling for this stock down over the past 3 to 5 months. Let's kick off with the bad news first. And if you follow Visa, you know that really the crux of their issue in 2020 was cross-border payments. So this is basically an American using their Visa card in France, for example, or any other cross-border transaction, Canadian into US, all those things. As you can imagine, during the pandemic, with travel coming to a standstill, that particular segment for them, which is a very profitable segment, dropped quite a bit. And to highlight some of the pain in the cross-border, this is obviously the full year 2020 income statement. You go over to year-over-year change, and you can see there's one glaring negative, right? And that is international transaction revenues, which is basically cross-border payments. And that minus 19% ultimately led to a minus 5% in GAAP net revenues. Now, Visa, I think, managed the best that they could. They lowered some of their marketing expenses. You can see minus 12% here, professional fees minus 10%, general and administrative minus 8%, and provisions for litigation minus 97%. There's probably not a lot of court activity with the health concerns going on out there. But at the end of the day, you come down and you're in the full year key business drivers, and payments volume honestly was about flat. And on a constant currency basis, it was up 2%. But you see minus 22% when you exclude Europe, and then minus 16% overall, plus 2% on processed transactions. You know, same with plus 2% on payments volume. So this is the crux of the issue right here for Visa in today's world. Now, of course, we all know that cross-border payments are not a long-term issue, but we probably do still have 6 to 9 months of dealing with this, certainly at a lower level than we saw in 2019, or a higher level of cross-border issues than we saw in a full travel year of 2019. Not to mention, we're basically going to miss out on Q1 and Q2 for cross-border payments. And while the e-commerce shift, as you saw, transaction volume's doing good, the extra fees associated with travelers really do well to pad the bottom line. Now, the next primary issue that's weighing Visa down is more like a disappointment, and that is that the Plaid merger that was planned for 2021, they ultimately decided not to go through with that because the Department of Justice was investigating monopoly concerns. And if you're not familiar, Plaid is a company that helps you connect your bank accounts to other services such as credit cards, peer-to-peer payments, etc. The deal, which was a big one, $5.3 billion, started in January of 2020. That was the announcement. The DOJ came in November of 2020 with the monopoly sort of threat. And so ultimately, Visa just decided that it wasn't worth their time, right? So the two companies confirmed the deal is officially off. Visa wrote that it could have eventually executed the deal, but that protracted and complex litigation would take lots of time to sort out. All right, so my perspective on the Plaid acquisition failure is, it's a disappointment. It did offer some opportunity to keep building their network and, insert themselves into other digital payment flows, most notably those that don't inherently use a credit card. So it was a big deal. I mean, it was a big deal as far as them going after this and securing it. But on the same token, the $5.3 billion deal, which I'm not sure how much that was cash and stock, but that money was set aside. So somewhere in the checkbook, Visa has this money now for mergers and acquisitions that they thought they were going to spend in 2020, and that's now available. On the downside, this DOJ sort of shadow now is casting over them. So I'm not sure how aggressive they're going to be on mergers and acquisitions till some of this stuff settles down a little bit. It wouldn't surprise me if you didn't hear a whole lot out of there until next year, 2022. Now, they did recently add a smaller company called Yellow Pepper, which helps them to integrate more into Latin America and Peru. And this is sort of an under radar pick that could turn out to be something much more down the line. But essentially, Yellow Pepper will help them integrate into those countries. And the fundamentals of that Yellow Pepper technology, who knows, it could span more into Europe, into America, etc. So that is something to watch. All right, and last on the sort of bad news front, in my opinion, is just this uprise in fintech technology. And we have a lot of analysts who are digging deep into fintech. And of course, the question becomes, are credit cards, are cash, are banks, are those things going to be the future of money? And at least in my camp, I couldn't be less worried about our monetary system, especially considering where we stand as a world right now, coming off of a pandemic, etc. But don't be surprised if you do come across some intriguing articles that are essentially bearish on Visa because they think the credit card game is coming to an end. And just to highlight some of the things that I've been seeing pop up here in this bull market, this article was interesting. Here's the URL. This is on Seeking Alpha. I'm not sure if you need a membership to read it or not. But long story short, this particular author was using China's evolution of things like Alipay and Tenpay and mobile payments in general to make the argument that Visa's credit card system is antiquated and that mobile payments will eventually supplant what Visa and traditional banks are doing. My problem with the article right off the bat is that it uses China as the example. And China is just a different world. I don't know how to make it any more clear. First of all, they have a bank, People's Bank of China, that's ultimately run by the government, and that's the only bank in town. Then you have Alipay and Tenpay, which have essentially, been supported by the government as well, and there's really no other choice out there. So of course they have massive installation basis. So I just think it's a different game. And if you use your noggin even just a little bit more, you know that Visa, MasterCard, Amex has had very limited access to the China market. There are hints that some of these things could change. This was 2020, where discussions were going on about improving the application for payment licenses. But at the end of the day, China is simply not on Visa's financials right now in terms of a big participant. I'm sure they'd love to get in there. There's quotes even in this article, China is a vital market for us, a fellow from MasterCard said. But at the end of the day, any addition in China is much more of a growth bonus than it is a necessity. All right, so depending on which side you believe in, there are plenty of people talking about fintech threats tearing down Visa's empire. I don't see it, or if I do agree with any of it, it would probably be 10 years down the line. I'll tell you the two main reasons why out of my camp. The first one is payment security. China uses QR codes and apps and all kinds of different ways to pay within their country. It's simply not a secure option here in America. And QR code fraud, I could see being a huge problem in America, not to mention Europe, Mexico, stuff like that. So it just doesn't, it's not an apples to apples comparison is what I'm getting at. Secondarily, I'd like to bring up the fact that credit card rewards in America and Europe when with travelers and business is a huge part of the attraction to credit cards. So if you're arguing that more direct connections between money would eliminate fees and thus drive Visas, MasterCards out of the world, you're probably forgetting just how big the rewards and benefit business is. You're probably also overlooking security concerns that ultimately drive credit card usage. And of course, B2B or any type of business platform where people have to measure expenses and things like that. I just don't see how we get away from that world in any sort of timely manner. I also think that Visa's technology evolution is much harder to explain, but it's also one of their secret sauces. And it's kind of this network of network effects where they are building applications into, every known transaction of money, right? So you can use your Apple Pay wherever you decide to use Apple Pay, but that has the option to connect to the Visa card. Same thing with PayPal, same thing with Venmo. I personally haven't used Cash App, but at the end of the day, a lot of these newfangled solutions, if you will, are ultimately tied back to a credit card, and Visa makes sure that those payments are secure. So the win isn't necessarily designing some new app. The win is that more payments go digital. And when you're betting on that front, all you're asking is for less hard cash and check payments, right? And when you think of it that way, there's almost no known way that Visa doesn't grow as cash continues to be less attractive as a form of sale. And then lastly, on the bull case, the cross-border transactions, which, oh, by the way, are the peak problem, there's a solution there, right? And it might take time to get there. And 2021 may not be the best year ever, but they should proceed back into growth mode for 2021. And then I think 2022, if you get 12 full months of international travel and business travel, then things are really rocking again. All right, looking at the stock today, you've got a price of 201.59. Here's your 1-year chart, and you see you're basically flat since prior to the pandemic in and around mid-February. The pandemic lows came in at 146, and since then, you've probably been as high as 215, or it looks like here's a 218. Then you kind of saw some of the momentum come out in the first part of the year, most likely due to the Plaid news, which again wasn't hurtful, but I think it was disappointing. P ratio today of 41.24, that's pretty high for Visa, and we'll take a look at the historicals in a minute. EPS of 4.89, and you do get the small dividend, 0.63% based on today's price. All right, looking at the valuation metrics over time, again, trailing PE at a 41, forward PE dips to 37, but if you go back to the sort of last of the normal days, you were at a 35 and a 30 for those metrics. So a little bit higher than Visa traditionally trades. In fact, if I switch over to annual, you can see if we go back, you're basically under 40, but that forward PE was trading in the mid-20s. So at least from a forward PE perspective, you're paying a little bit more than usual, but certainly not at the same levels that you've seen some of these growth stocks take off with. All right, so let's take a look at where analysts are projecting Visa from an EPS and revenue perspective, okay? So we finished 2020 fiscal year at $5.04. The average estimate for this year is $5.45. Now we're early in the year and this number could easily go up over time. In fact, it probably will. But you know, you're looking at about a 10% increase in EPS. However, when you get to 2022, you can see how big that jumps up to 684 as the average analyst estimate. So 2022 is really your year for Visa. And if you don't have a position right now, or if you're like me and you're managing cost basis for the future, you know, this could be a year, depending on negative headlines and momentum and market dips, that you can buy into a relatively cheap price and then set your sails for 2022, which, by the way, the stock returns on 2022's estimate will start to flow in, call it October or so, as people start to look ahead to 2022. All right, on the revenue side, 2020, you were just under $22 billion. Average estimate goes just above $23 billion. And then again, 2022, you know, you're adding plus $4 billion or so in terms of analyst estimates. All right, looking at some of the key metrics on the balance sheet, you have total cash of $20 billion, debt load of $24 billion, which is a little higher for Visa. I usually like to see the debt load under the cash position whenever I can, but it's all kind of relative to how your business runs. Trailing 12 months revenue, which includes the pandemic, $21.85 billion. So, you know, you're bringing in 20 plus billion a year. You've got 20 plus billion in the bank. And on the debt side, you've got $24 billion to manage. Now, the other cool thing about Visa that I was showing you with Facebook, if you go to short interest, the short percentage of float as of the end of 2020, you know, it's below 2%, 1.8%, and 1.38% if you count all the shares. So what this means in short is that there are not many people who have put their money where their mouth is if they're calling for Visa's decline. You know, roughly 2% of all the shares out there are shorted. If you want to compare that to some of the more volatile stocks, you would see double digits easy in this short percentage. All right, finally taking a look at TipRanks so we can see how the best performing analysts view Visa over the next 12 months. If you're interested in learning more about TipRanks, my affiliate link is in the description, and I also have a walkthrough video on my channel if you're interested to see how I personally use it and have done so over the past couple years. But bottom line for this video, we always sort by the best 4 and 5 star analysts from TipRanks analyst rating system. And we also sort by date, right? We want to get the freshest news into the opinions of the analysts. We don't want to look too much at some of the targets from a year or 6 months ago because the news changes every day. So for this video, we'll start at kind of the 1 month timeline and looking up. And you've got buys across the board. And if I had to calculate, you know, this median upside, it's probably somewhere in the neighborhood of 230, right? We've got a couple 225s, 250, 270 on the high end. All right, so I think analysts agree that there's still plenty of upside for Visa, even at its current price of $200. But I think when you put all the evidence of this video together, you can see that there is a play here, right? And that what you have is some negative headlines or some negative sentiment kind of holding Visa back, and you're likely going to have to wait it out until this big travel boom occurs, which, I'm guessing is happening around May or June. We all want to get out and do things, even if it's just a cross-country trip or a car ride or whatever. More than likely, you will use your Visa card during those adventures. And if you're lucky enough to get out of your country and explore other new places, it makes a lot of sense that you would use your credit card for safety and security in those particular situations. So bottom line for me, I am not getting rid of any of my Visa unless there was some even more negative turn of events. But on the latest headlines, I'm not even worried about it. Visa will stay there. I get the small dividend. And I know as an investor that I'm looking at 2022 for this ship to fully turn around, and we may not see the price run up very much until the back half of 2021. That's about the time that analysts will start to focus on which stocks are going to grow the best in 2022. And Visa will obviously be in that game, seeing the numbers that I've showed you. All right, guys, so let me know what you think about Visa stock. And if you found this review helpful, please give me a like and subscribe to the channel. We'll see you on the next video.